The Get Rich Slow Club podcast is a collaboration between Tash Etchman from Tash Invest and Anna Christina from Perla. The Get Rich Slow Club acknowledges the traditional custodians of the land we record on. From coast to coast, across land, waters, and communities, we pay our respects to elders past, present, and emerging. Any advice is general and does not consider your financial situation, needs, or objectives, so consider whether it's appropriate for you.
Welcome to the Get Rich Slow Club podcast,
where we take you from beginner to confident investor,
where we can teach you everything you need to know about investing.
So come get rich slow with us.
Hello and welcome back. We have a special guest here with us today. Her name is Natalie Lennon. She is an award-winning accountant, founder of Two Sides and Two Sides Academy, and also has her own podcast. What's your podcast called?
It's called Totally Bossing It, the podcast.
And what is it all about? Tax stuff?
So season 1 was coming back from COVID. So talking about businesses and how they've thrived through COVID, pivoted their businesses, which I think at the time pivot was the key word.
Yes, it was a buzzword.
And yeah, just their stories. And then season 2 was more for small businesses. So how to boss it in their businesses, when to register for GST, how tax rates work, things like that. And now season 3's moved into something a bit more for the accountants, because now I'm mentoring accountants and bookkeepers.
Wow, you do everything.
Yeah, I've been very busy.
Amazing. Well, we usually start off with a money win or money loss. We called it our money moment. Let's start with Anna. What's your money win, money moment?
It's like the biggest money loss. And the funniest thing, Tash, is that we talked about this literally like just recently about booking flights. So I ended up paying $75 for luggage. I forgot to do like the pre-order of luggage for Jetstar. And then I got to the gate and they were waiting for me with their little weighty things. What are they called? Scales. Weighty things. And sure enough, I paid $75. I could not believe it. I was only like 2 kilos over or whatever.
I've been flying with Virgin a lot more recently, and they haven't weighed my bag in so long, which is such a win. But yeah, that sucks. $75 for 2 kilos. Too much.
I almost cried. I was so angry.
Especially when you're stressed and you're a bit late and you're like, oh, my day's been shitty already. And then you show up and you're like, oh my gosh, not this too.
Yeah, I've had a lot of money losses recently with like the parking.
Yeah, the parking was horrendous.
And honestly, it's all due to me just like not doing my due diligence. I'm obviously stressed.
Due diligence? Make it an investing thing.
Yeah. I'm just like not like doing what I need to do, which is like check how much things cost, get everything done. I'm obviously just rushing. So I need to just slow down a bit, but yeah.
Nat, what's yours?
So mine is also travel related. So we just booked airfares through Qantas using points to Queenstown business class. And I think we only paid maybe a couple $100 in taxes. So that's definitely a win.
Oh, nice.
Amazing. How many points was it?
It was quite a lot. I've been banking the points. I think it was probably around maybe 250, like 250,000.
Okay.
So it was a lot. Qantas points are not as,
people?
for 2 people, yeah. Qantas points are not as good as they used to be since they've just changed their point structure, but still good value.
Yeah. How did they change them? I know they had is it Classic Rewards before and now they've named it something else?
Now I think they've got the Classic and then they've got another level of Classic.
Okay,
but
2 different ones.
Yeah, they're not as good as they were before.
Yeah, because one has like some of the good ones still, but then the other ones are like changes depending on the price as well and like what the fair prices are.
I think they've been a bit cagey about how they've explained it.
Oh, okay, if it's secret, yeah. They announced it as a really exciting thing. They're like, oh, we've got more reward seats. And everyone was like, nah, they're just more expensive now.
Yeah, I read the small print and I was like,
no,
not a fan.
Still good though.
Still
Business
good.
Class to Queenstown, did you say?
Yeah.
Amazing.
Well, to Auckland.
Oh, yeah. Auckland, yeah. Perfect.
Yeah.
How good. Mine is less fun. I've been playing lots of games on my computer recently because it's fun to just ignore the world and play a game. There was a new one that came out, but I bought it and it was only for Windows. And I only have a Mac computer, so I can't play it. Yeah. So sad. So maybe I'll have to buy a Windows computer.
Justify that purchase.
I don't like
that won't be a money win, no.
I'm now in the Apple ecosystem so much that I can't switch back, I don't think.
That's how they get you.
They've done so well, yeah. The AirDrop feature is my favorite, but to send photos, it's too good now.
I'm a Mac fan. You can never go back.
No, yeah.
So let's kick it off. Taxes, the most exciting topic in the finance world. Let's be honest here.
Yeah.
How do they work? What is the easiest explanation you can come up with? Because I know a lot of people get confused by marginal taxes.
So the tax rates are definitely one of the most misunderstood topics, and I think they should actually teach it at school because like even when we learned it at uni, it was still a bit hard, to get your mind around the different sort of layers. So it's on a sliding scale. So most people don't pay any tax up to $18,200, and then once you go over that up to $45,000, you pay 30 cents, and then it goes up and up and up. And it won't go through, all the different rates. You can have a look at those. And so, the average person is probably paying around, I think the average rate for Australians is around 25%.
Oh, it's quite lower because you hear like, oh, you get up to 40% or what was it, like 45 before?
Well, the top one's 47%, but then you add on the Medicare levy of 2%, so 49%. So the top one is quite high, but the way the rates work is you're only paying that higher rate on anything over, I think it's the 180 at the moment. So once you go over that 180, you're paying that extra amount in tax.
Yeah. So anything below that, you're paying those separate different tax rates. It's not as though all of your money is now taxed at this huge tax rate. And that's the big misconception. Yeah. And I often hear sometimes people saying, oh, I don't want to take on a second job because I'm going to be taxed differently. What do you say to that?
Yeah, so I've actually done quite a few TikTok videos on this one. And let's just preface it with 180 was the top rate for 2024. It has now just changed to 190 for the 2025 financial year. But the way the tax rates work, like I said before, is because you're paying it on that sliding scale. So if you've got a second job, it gets added onto your income for your first job and any other income. So then you probably will pay tax at a higher rate. But
it's cumulative, right?
100%,
it's like your holistic income. It's not like all of a sudden your second job is
to push you into that bracket. No, and I think that's the biggest misconception is that I don't want to get a second job because it's going to push me into that next bracket and then I'm going to be paying all this tax on everything. But you're only paying that on for every dollar you go over the 190, you're paying that extra rate, or every dollar over, a certain bracket that you're paying.
I saw a really great.
It's not a very good explanation, but it's very confusing.
I saw a really great video where it was showing this analogy of water in cups, and it's like you first fill the first one, and that's tax free. You go to the next one, and that's how much tax you're paying, and then the third one. Yep. So it's like accumulative in terms of those brackets, as opposed to just being like I'm paying 47 cents on a dollar or something. Yeah.
I think some people get confused because you claim the tax-free threshold on one job, but not on the other job. Yeah. When they look at two pay slips, they're like, oh, this one is taxing me less than the other one, so I must be getting taxed more at one job. But it's good to remember that you can add it all up together. Your dividends, your bank interest, whatever jobs you have, and then you get taxed on that final amount rather than individually each one.
Yep.
Or I like thinking if you're getting taxed more, you're making more money.
Yes.
So win-win.
That's what I always say. I always say tax is a good thing. If you're paying tax, it means you're earning money. And most clients don't like to hear that, but that's the reality. Yeah.
We're just jumping back into the tax rates. They've unfortunately just changed, haven't they?
Yes, always changing. So we thought we'd just crop this and put it back in because it's the first week of July. My brain's a bit mush. So let's just run through them. We're not going to go through all the different rates. We're just going to do the top rate because I think that's the one that we were talking about. So for the 2024 financial year, which has just gone, so this is the one you'll be doing your tax return for at the moment. If you go over the 180, you're paying 45 cents in the dollar plus the Medicare levy of 2%, so 47%. I think before I said 49%, added on an extra 2%. I don't know why. And then for 2025, I think I got this one right. So it's $190,000 is the top bracket. When you go over the 190, you're paying 45 cents in the dollar plus an extra 2% Medicare levy.
Okay, so it's staying the same for the top tax bracket?
No, it's gone from the 180 to the 190, but the rate's the same.
The rate's the same, but it's gone $10,000 higher.
Up.
Okay.
Yeah, and then we had all the stage 3 tax cards for the different changes and everything. So
yeah, if you Google just tax cuts, it comes up with a government website that's like taxcuts.gov or something, and they've got a calculator to help you work it out and a table as well. So that's good to look at.
Yeah, awesome.
Another kind of myth or misconception that I hear all the time is if you get a $100 handbag and you want to claim it as a tax deduction, do you actually get a refund of $100? How does that work?
Yeah. So
wait. Can you claim handbags?
Apparently so. It's the TikTok going around at the moment.
What?
Okay. Yes. So you can claim handbags, but in a limited capacity, which I'll get to in a minute. But it comes back to your tax rate again. So if your average tax rate, let's say 25% for this example, for every dollar that you spend on a handbag or other deductions, you're only getting a 25 cents in the dollar reduction on your tax. You're not getting cash back. You might get cash back if you're getting a tax refund, but you're not just, buying the handbag and then getting the cash back, which I think a lot of people,
assume it is with the wording we use.
Yeah. So it's like they think it's a $100 bag, you get $100 back.
But no, you just get whatever the tax is.
But I also didn't know you could claim a bag. What?
Well, so you must use it 100% for business. Otherwise, you have to apportion a private use. Not sure how the ATO would, unless they're going to follow you and see how you're using it. But, you're supposed to tell them about that. You also must need to carry items for work. So, it can't be just a little tiny handbag that's
Those little ones I've seen on TikTok where you can't fit anything into it. They're wild.
Yeah, so you've got to be able to carry, a laptop, a notebook, those types of things. And you must have a record, so you must have a receipt.
Yeah, fair enough.
And is it up to $300 I've seen as well, or can you get something that's more than $300?
There's not an actual, ruling on how much it's supposed to cost, but if you go and buy a designer bag, $10,000 and you try claiming it, you might have it might be a bit hard to explain that you're just using that for work.
Yeah, hard to justify. Is the $300 thing what you can claim without receipts?
Without receipts, yes. But the other thing that people forget in terms of that $300 without receipts rule is it's not per category of your tax return. So you can't claim $300 work-related without receipts and then claim $300 motor vehicle without receipts. So it's cumulative. So it's all your deductions. If you don't have any receipts, you can claim $300 max.
Okay. Do you always claim $300 max on everyone's tax returns then?
Well, that's another thing that we're not actually supposed to do.
Okay.
Because the ATO can come and say, well, hang on a minute, what's going on here?
Yeah.
Because even if you do claim that $300, you're supposed to be able to still tell the ATO what that's made up of. You can't just say, well, I'm just claiming that $300 because that's the rule. You have to say, oh, look, I think I spent so much on stationery, so much on tolls, et cetera, et cetera. Although once again,
tolls. Can you claim tolls?
You can claim tolls if they're work related. Yeah.
Surely you can claim tolls if you can claim handbags.
Yeah. I'm from Perth originally and we don't have toll roads there. So I'm like, oh, that's a fun one.
Yeah.
So with vehicles, what deductions can you claim actually on vehicles? Tolls now, as we've learned.
So tolls are actually a travel expense, not a motor vehicle expense. So tolls you can claim 100% if they're work-related trips. In terms of your motor vehicle, there's two ways that you can claim. So there's the most simplest way, which is cents per kilometre. I think the rate just went up to 85 cents per kilometre for the 2025 financial year. Not to be confused with, I think this is the hard thing with us recording this podcast today in July, is that everyone's doing their tax for 2024. So some of the things we're talking about were 2024 rates and some are going to be 2025. So
we'll clarify it's this year going forward, now it's 2025. Yeah.
Yes. And so, you can claim cents per kilometre. You can claim up to 5,000 kilometres. Now, you still need to have some sort of proof of how you've come up with those 5,000 kilometres, even though, that's the max you can claim, like all of these things. And then the other way you can claim is the logbook method. So you keep a 12-week logbook, you log, where you went, whether it was business, whether it was personal, and then after the end of those 12 weeks, you add it up and you work out your business usage or work-related usage percentage, and then you can times that by things like fuel, registration, insurance, repairs. If you've got it on finance, you can claim some of the interest, and you can also claim depreciation. And the logbook's valid for 5 years unless your pattern of usage changes. So the logbook is obviously the better method to use, but more onerous on record keeping because you have to keep all your receipts. And all those
for 12 weeks as well, doing a logbook, that feels like a lot. Yeah.
And when it's for work, does that mean like on your job you're driving, or can you count that like going to and from work?
No. So if you're going to and from work, that's private. Yeah, there are some circumstances where you can claim if you're carrying tools and other things, but generally to and from work, not claimable.
Yeah. I used to do this when I was a support worker because we got paid for kilometres when we were with a client but not between clients. That's when we would claim it on tax, which worked out well. But keeping track is difficult.
Yeah.
So those are the tax rates for last year. What about this year?
So this year, the top tax rate is actually over $190,000.
Okay, so it's been increased.
Yeah, so once you go over the 190, you're now going to pay 45 cents in the dollar plus the 2% Medicare levy.
So 47.
Yeah, not the 49 that I said before for 2024. Yeah, so many changes and we're only 5th of July.
Yeah. We found this really hard writing our book because the concessional super rates changed and how the concessional caps changed. And that was a bit challenging, being like, oh, do we change it? Do we not? Are they confirmed? Do they not? So it gets hard. So always check the ATO before you do anything.
100%. I think just to give an example of something that the ATO and the government just did was they just brought in the immediate write-off that they didn't bring it in, they brought it back. And they actually passed it through legislation on like the 24th of June.
Great.
And, we're trying to do tax planning and advise clients. It's basically talking about, if you run a business and you can claim up to $20,000 immediately for, buying a car or any other equipment you use in your business. But so we're trying to plan with our clients. We had no idea if it was being passed. And so a lot of the time when the government announces these things, we sort of go, well, let's not talk about it until it's passed because they can, like the stage 3 tax cuts.
Yeah. They changed so many times.
It took them so many times to change it. So I didn't do any videos until it was passed. And then when I was doing those videos and I was seeing other accountants posting, and a few I was messaging them and going, hang on a minute, which version was this? Is my video wrong? Is yours wrong? And they're like, actually, no, that's the last. So yeah, it can get very, very complicated.
Especially when TikTok like brings up videos from months ago or like a year ago, it'll go viral again and it might be wrong now or outdated. So always important to check.
Yes. Yeah.
Okay, now that we know about transportation costs or what you can claim, there's a lot of us that work from home, myself included. And I know that during COVID, there was a lot that was kind of put in place to make that a bit easier for people. What are some of the things that we should consider for if we're working from home that we should claim on taxes?
Yeah. So if you're working from home and you've got a separate room set up, so it's just a separate room that you're just using for an office, there's no bed in there. Once again, I don't know how the ATO will check this unless they come around and have a look, but these are how the rules work. And if you're renting, you can claim a percentage of your rent. So you'd work out the floor space of your home office in terms of the rest of your, your house or your apartment, work out the percentage, and then you can claim a percentage of the rent. And then you can also claim a percentage of your electricity and your water, your internet, any desks that you buy, any chairs, any equipment. And if you don't have a separate room set up, you can use the other method, and that's a cents per hour method. So you work out how many hours you're working from home and then you times it by the rate.
So that's definitely the case in my house. We have a designated office space that both my partner and I use as an office.
Yep.
Should we move into the bigger bedrooms so that we can claim more space? Or like, how do you advise that? And especially because there's two different ways that you can claim taxes on it. What's the most beneficial way for a taxpayer?
Well, I guess it's really up to you. If you want to move into the bigger space, move into the bigger space. It's going to give you a bigger tax deduction. But will your guests be happy? Like, is it a spare room where the guests come and stay?
Yeah. How does that work with you and your partner? Do you both claim the whole room or do you have to claim half the room each?
You'd have to claim the percentage and then half each.
Yeah, okay.
So you can't double dip. So, we have seen some taxpayers where they might maybe one partner would come see us and another partner will go see another accountant and they try to double dip. But it's, our job to ask the questions and say, look, who else is in the household? Have you got 5 kids? Have you got a partner? What's going on? If you've got 5 kids, you probably can't claim a high percentage of your internet.
Yeah.
Right. So if we had our own separate office spaces, then we would claim the full room or whatnot. Yeah. Well, I want to make a little podcasting studio in my house. So yeah. I mean, it's important to think about. I know like during COVID time, it was hard for a lot of us because we had to buy chairs, desks, like a full kitted setup to be able to properly work from home. And then now, that's kind of in place, but you have to, what can you still write off?
So what I always like to say is if you're not sure if something can be claimed, just put it on your summary and ask your accountant. What's the worst they can say? No, it's not claimable. And just depends. Some things you might think are way out there, they might be 100%, you might be able to claim them. Whereas, some people really push the boundaries and we go, no, you can't.
Do you have an example of someone kind of having a really out there one that you've actually been able to?
Well, not out there, but like, you can't claim your coffee machine, for example. I had someone try to claim a coffee machine.
Why not?
Unless you're a barista, maybe.
Yeah.
Fair enough.
Yeah.
A bit more of a niche one, but I film TikToks all around the apartment. Can I claim all of the apartment as work too, or like half of it?
No, unfortunately you can't. I really think the ATO needs to, and I was actually being interviewed for an article on this the other day, and I think the ATO needs to actually update their rules around influencers. I don't like to use that word, but influencers.
Yes, content creators.
Creators, because actually you form under the performing arts code that they use. So when you're doing your tax return, you have to put in a code of your occupation, and that helps the ATO data match in terms of what, other people in your industry are claiming and earning. And so I don't think the content creators really fall in that category, because if you're comparing what you're claiming to a performing arts, maybe a dancer, it's going to be totally, totally different.
Yeah, I found it a bit hard before I had my own company, because there was rules around having to pay super and you had to be signed up as an employee to get paid as a contractor sometimes. And that was really tricky because I wasn't like a contractor in that way. I didn't want to be an employee when I was working with so many different companies. But now I have a company myself, it's a lot easier. Yeah. But the rules seem quite interesting for performers.
Yeah, I definitely think the ATO needs to catch up. They need to focus maybe on these areas of the legislation and less focus on touching the things that we don't need them to touch. Yes. That's what a lot of accountants say is, please stop stuffing around with things that just don't make sense and let's move with the times.
We'll have to send this to them later. Bill content is what we want.
Yeah.
I think I just did a TikTok where I asked them to rename the tax return because everyone thinks they get a refund because it's called a tax return.
Yeah.
Not always, no.
Maybe I'll write the commissioner a letter.
Yes. Anna has to leave us now, unfortunately.
Yeah, I have to catch a flight, and you'd be happy to know that I actually upgraded my suitcase, so I will not have to pay the $75 fine. I only paid $35 for that upgrade.
Yes, that's good.
But I'm going to let you guys carry on tax time.
We're actually in Sydney recording this because we had our book launch last night, so we're all here today, which is fun, but Anna's flying back to Melbourne now.
All right, cheers.
Nice to meet you. Safe flight.
You too.
So this podcast is generally aimed at people who are investing in shares or learning more about shares. Often one of the questions I get is, well, what do I do at tax time with shares? It can be really terrifying. It's this whole new thing. What beginner tips do you have for people who've just bought shares for the first time, either last year or this year?
So the first thing is to make sure that you've registered your tax file number with either the platform that you're using to invest or the individual companies that you've invested in, because that'll make tax time a lot easier because all the information will flow straight through to the ATO. So if you're doing your own tax, it'll pre-fill, any dividends and interest.
I love that so much. When you wait a little bit longer after July, it's good.
Yes, it's easier for the accountants as well, especially if you've got managed funds, because trying to enter all those different labels into the tax return. Yeah.
I feel so sorry for my accountant because I've bought so many different ETFs and things over the years, and it is, they fill out like a page for every single one. It's big.
Yeah. And probably also keeping a summary if you can, if you're buying and selling, keeping a summary just to make it a lot easier and more cost effective too, because otherwise you're going to pay your accountant to, add everything up, go through all the paperwork.
Yeah.
Yeah.
Especially when you've only got like a $4 dividend and you're paying someone to help you pay tax on a $4 dividend. Yeah. It's not the best.
Yeah.
I use ShareSite, which I find quite helpful. Have you had any issues with that? Do you have clients who use it as well?
I think we've had a couple of clients using ShareSite. I think it's one of the ones that actually gives some good reports. So I think one of the worst ones we've seen is probably Spaceship. The reports in Spaceship are not very good at all.
Spaceship's just not very good in general at the moment.
Not.
Yeah. They've had their problems. Lots of people do like Spaceship though.
Yeah.
Have you seen Raise? Are they good?
Raise is actually quite good.
Yeah.
They've got a good tax summary.
I liked them when I was using them personally because they told you which box to put things in. It was like put it in E14 or whatever. So that made it really simple.
Yeah. And then that'll all pre-fill as well if you've given them your tax file number.
Yeah, awesome. So keep a record, tell your accountant and tell your actual broker or managed fund your tax file number.
Yes. And probably don't forget the crypto, because I think crypto, that's not a whole other question.
I have a bit of crypto, and that has been hard because I used to do what they called it, what was it, staking it or whatever, where you got income on it. And that was like income you earn every single day. And that, was a bit of a nightmare.
Yeah, that's a big nightmare. I think that's another sort of grey area with the ATO as well, is that they haven't caught up.
Okay.
Yeah.
And most accountants don't seem too keen on it either. They're always like, crypto, that'll be this month's extra straight away, which is fair enough. But
look, to be honest, with crypto, some of the way that we've looked at it is, obviously when people were earning a lot of money out of crypto, yes, we have to do it correctly. But probably over the last maybe year or so when everyone's losing money on crypto, we've sort of taken the tack of, as long as it's not huge, let's just leave it out for the moment. And then, like they'll summarize it and get it all ready, because if you're making a loss, it actually just gets carried forward to future capital gains. So we don't really need to worry about it at that time.
Okay.
Just to help people, save a bit of money.
Yeah.
And look at it later, but not to just forget about it, because, we want to put it in there.
Yeah. But
there's no point paying us to calculate all this stuff if you're not making any money.
No, and especially when it's such small amounts as well. Like I know a lot of people bought a few $100s here or there. Yeah, it adds a lot of extra work. It's definitely something to think about when you invest. Like, is it worth the tax burden that's coming up?
Yes.
Do you have a dream or perfect client who comes to see you?
Look, for us, we do everything electronic. So we don't take clients with shoe boxes. In fact, a lot of accountants probably don't do that anymore.
Do you say no to them?
Yeah, we do.
Oh,
yeah,
okay.
We actually send them to H&R Block most of the time, and that's probably the only place. I think we had a nice little old lady that rang up last year, and she had a few years of tax to do, and she had shoe boxes of receipts and things. And I said, look, we're actually fully remote now. We don't have an office. Like, we do have a space that we go to for meetings and things, but it was going to be too expensive for us to do it. And so we said, go to H&R Block and they'll help you. And she actually rang us back and said, thank you so much. Like, they helped me and they were good.
Perfect.
But like I said before too, you don't want to be paying your accountant to shuffle paper. It's just not worth it. So electronic summaries. So if you can summarize, we get our clients to summarize their receipts. And then if we have any questions, we might say, look, can you give us that receipt, or what's that in regards to? But yeah, if you can, the more work you can do to summarize and have everything in order for your accountant, the better.
What do you mean by summarize? Is it like put it on an Excel
Probably in an
spreadsheet?
Excel. Yeah. Yeah. Probably don't do it in Word, or don't put it in Excel and then PDF it and send it to me. Okay. I need it in Excel so I can check the formulas, so I don't have to
so you can
try
do it as well.
Yeah. Yeah.
I've had that when I've tried to send my credit card statements to my bookkeeper because I've got one of those now, and like it's downloaded funny in a PDF, and I'm like, oh, sorry, here it is. Good luck.
There was no CSV?
I was having problems. I don't know why my Mac wasn't saving it in a format he could access for some reason. And in the end, we got it to work because I have Amex is fine. I can pick the format, but some of my Westpac ones, for some reason, it's just like, here, have it in this Apple only version, and then trying to convert it. I was having problems with that, but we figured it out.
Oh yeah, because it's probably going to numbers. It's going to
some other thing that and
then you got to convert
But
it.
I was like opening it in Excel as well. I don't know. It was so much admin. Do you have some final tax tips for everyone who are doing their tax returns at the moment?
So like I said before, if you're unsure if you can claim something, always ask, put it down, ask your accountant. There's no point, if you don't ask, you don't get. We work electronically, so we have a questionnaire that we send out our clients where they can answer, different questions. Did you work from home this year? If yes, do you have a separate room? All those types of things. But in saying that, we still could miss things if you don't tell us. We're not mind readers. Although sometimes, we will pick up something that maybe a previous accountant didn't pick up, and they'll say, oh, my other accountant didn't tell me that. And I said, well, did you have a discussion? Yeah. So it's about, really just being open and communicating with your accountant, telling them your situation so they can understand, if you're working from home, getting them to, understand the setup, the family makeup, all those types of things. Also, like I said, keeping receipts, keeping summaries. And if you do have a business, so even if it's a side hustle, if it's a business, you've got an ABN, open up a separate bank account.
Yeah.
So that you can track it.
Keep it all separate, yeah. I definitely started my business a bit randomly and had some of those issues, especially with registering for GST. That was a bit tricky, lots of rules around that. But we are doing another part 2 soon to answer everyone's questions. So we'll get to that in the next episode. Yeah. But thank you so much for joining us.
Thank you for having me.
Yay.
Thanks so much for joining us. If you found this episode helpful, please rate us 5 stars, write a review, or share with a friend. If you're new to investing, make sure to listen to our first 10 episodes. Follow us at Get Rich Slow Club or Tash at Tash Invest or me at Ana Cristina.
This show was brought to you by Natasha Etchman, who is an authorized representative 1299881 of Guideway Financial Services, AFSL 420367, and Perla, who is an authorized representative 1281540 of Sanlam Private Wealth, AFSL 337927. Knowledge is power, especially when it comes to investing. So make sure you check out our financial services guides and read the product disclosure statement and target market determination for any investments you're considering. See our show notes for more info.